Finance sounds complicated, but actually it's built on some simple concepts. In this video, we'll cover 10 basic financial terms that every student, investor, and business owner should know. Once you understand these, you'll be able to follow financial news, make better money decisions, and even start investing with confidence. First, let's talk about assets. Assets are anything you own that has value. It could be your cash in the bank, gold jewelry, stocks, or even property like a house. Simply put, assets are things that can help you build wealth or give you future benefits. Next, we have liabilities. Liabilities are the exact opposite of assets. They are what you owe to others. For example, a home loan, a car loan, or credit card debt. Liabilities reduce your wealth because they represent money that needs to be repaid. Equity means ownership. When you buy shares of a company like Infosys or Reliance, you actually own a small piece of that company. If the company grows and makes profits, the value of your shares also goes up. That's why equity is a powerful way of building wealth in the long term. Debt is borrowed money. When you take a loan from a bank, you are in debt. But debt also works the other way. When you buy a bond, you are lending money to the government or a company, and they promise to pay you back with interest. Debt investments are usually safer than equity, but the returns are lower. Interest is the cost of borrowing money. For example, if you borrow 10,000 rupees at a 10% annual interest rate, after 1 year you will have to pay back 11,000 rupees. The extra 1,000 is interest. The same works in reverse. If you deposit money in a fixed deposit, the bank pays you interest. Income is the money you earn from your job, business, or investments. Increasing your income while controlling expenses is the first step to building wealth. Expenses are the money you spend for living. Tracking expenses helps you avoid overspending and save more. It includes groceries, subscriptions, as well as other bills. Inflation means the rise of prices over time. It reduces your purchasing power, so investing is necessary to beat inflation. It eats up your money, so keeping idle cash is even riskier as the value decreases over time. Investing helps beat inflation. Liquidity means how easily you can convert an asset into cash. Cash and stocks are highly liquid, but real estate isn't. Cash, stocks, gold are liquid assets, but real estate isn't a liquid asset as it can't be cashed out immediately when required. Diversification means spreading your investments across different assets so that one bad investment doesn't wipe out your wealth. It helps balance out the bad performing assets due to presence of various classes of assets with proper risk management. So, those were 10 key financial terms: assets, liabilities, income, expenses, equity, debt, interest, inflation, liquidity, and diversification. Mastering these basics will give you the confidence to manage your money smarter and start your journey in finance. If you found this helpful, don't forget to like this video, subscribe and share for more easy finance lessons.